Okay, let's get started. Good afternoon to our guests sitting in South Africa, and good morning to anyone who's stateside. Today, we're going to be chatting about how to get your pension. That might not be the right word because there's a number of different ways of putting it, but let's say for now to get your pension out of South Africa. So let me just start off quickly if I can do an introduction to Immigrate to USA is the business. I'm the founder of Immigrate to USA. It is a website that I created off the back of my own immigration journey. My husband and I immigrated 3 years ago. And I've built a website as a resource for South Africans looking to navigate the US. It contains blogs, articles, service providers, and a whole lot of advice just to make your whole journey just a little bit easier. As part of that, I've also partnered with a number of specialists who help South Africans when it comes to moving, visas, forex, tax advisory. So there's some really great verified service providers that are on the website to assist your journey, and I'm happy to guide you if you need help with anything. So for today, my guest is Mariska de Bruin. She's the director and tax advisor at Mint Accounting and Tax Advisory. Mariska is passionate about tax and specifically international tax. With so many South Africans sort of going abroad, she has assisted and she's dedicated to helping immigrants to navigate the complexities of tax, being tax compliant and efficient in their new country. And in our case, between SA and the US. So her expertise lies in tax planning, tax liability reduction, and tax migration. She has a motto, which is failing to plan is planning to fail. And I think that makes a lot of sense. In fact, in many aspects of immigration, I think if you don't plan properly, you can really come unstuck. But from tax and your finances, I think that's something you really don't want to mess around with. So without any sort of delay, I'd really like to get into our topic for today. And I think a good starting point, welcome, Mariska. Thank you so
Thank
much for
you.
taking the time to chat with me today. So, a starting point, this, the wording is often confused, and I know things used to be referred to as financial immigration, which is not a thing anymore. But let's talk about ceasing tax residency. I know that is a hot topic, and I know that is important. Many people say, well, I'm a tax resident in the US. I don't really have any obligations to SARS. I don't owe them anything. Tell us about the importance of getting things right in terms of SARS and your South African tax status when you immigrate.
Yeah, so that's such an important thing to get right because once you've left South Africa, you need to do the right thing and seize your residency if you have met the requirements to seize residency. So to start with that is that if you we look at two things when we look at how do you seize your residency. And a lot of people, like you say, just think, I've left, I don't really need to do anything. But if you don't do anything, you face needing to declare your foreign tax in South Africa, which is unnecessary. There could be high tax bills at a later stage. You lose out on all the benefits that you get as a non-resident in South Africa in terms of tax. So the starting point of that is just to look at the ways of seizing residency, right? So we call this seizing ordinarily residence. And this means that if you have no intention of coming back to South Africa, so we look at your intention, is if you have no intention of coming back, you break ordinarily tax residence in South Africa. So if you do break that, you have no intention of going back, then that means the date that you leave South Africa, whether this is now, it's in the future, or maybe it was 5 years ago, 10 years ago even, we backdate that date that you seize residency to that date. So that why it's so important is that if you think about everything that's happened in 5 years or 10 years, not ceasing your residency, that has a lot of tax implications. So ordinarily residence is that if you have no intention of coming back, you break tax residency on the date that you left South Africa. So that's the one test that we look at when we see, are you a tax resident or not? The second one is we look at the tax treaty and the double tax agreement between South Africa and the USA. So in the USA, once you have a green card or you meet the substantial presence test, then you would become a tax resident in the USA. And from the clients that I worked with, they mostly get their green card before they meet the substantial presence test. And at that date, they would then cease tax residency. We, of course, look at a few things, a few different tests, and we call it the tiebreaker clause. And I won't go too deep into it now, but basically, there's 5 questions we ask. So the test here is, do you have an intention of coming back to South Africa? If the answer is yes, then you remain an ordinarily tax resident. And we then ask, do you have a green card? And do you meet the substantial presence test, or do you meet the substantial presence test? So if you then do, then the DTA between South Africa and the US ask, do you have a permanent home in the US? So if you live there, then obviously you do have a permanent home. And that means that you don't have to own it, you just rent it, so you have a permanent home. If you still have a permanent home in South Africa as well, because maybe you didn't sell it, you're renting it out, or you're just keeping a family home, then that means that you still have a permanent home in South Africa, and we can't necessarily immediately determine if you break tax residency. But if you've got the permanent home in the US because you live there and you don't have a property in South Africa that you own, then you only have a home in the US and you break tax residency in South Africa. So if you meet any of these tests, and there's more tests that we can get in just now, I just want to answer your question really, is that if you either are not an ordinarily resident or you meet the tax treaty rules of having a green card and only having a permanent home in the US, you break tax residency. And if you do not inform SARS of that fact, that means that you are still seen as a tax resident in the eyes of SARS. And they would then expect you to declare your foreign earnings to SARS, which obviously you do pay tax in the US, there will be tax credits, but it does complicate things quite a lot if you do not just seize your residency and finalize your tax matters.
Okay. Okay, so it's got to kind of do with where in the world you are to determine that. So once we sort of tick those boxes, I know that many people are coming over at an age where they have built pensions, they have built savings in South Africa. I think sort of before we look at extracting that sort of those pensions or whatever we're going to call them, but before we look at the extraction of that, maybe you can talk us through the different types of pensions. My husband's in finance. I'm not. You can hear I'm sort of already getting stuck over the words here. But pension, RA, preservation funds, provident funds. I mean, and I know the words, but I don't know what they mean. Do we need to know the difference between those sort of pension categories in terms of being able to extract them?
Yeah, so they all have different rules of how they can be withdrawn or not. So your pension is generally something that you would have gotten through your employment. So the rules to that is, and I want to just say with that, there's two sets of rules now because I think everyone's aware of the two-pot system that was brought in September last year. So I'm just going to speak of it as if that didn't exist just right now, is that you've got your pension that when you resign from your employment, you can withdraw your pension or you can transfer that into a preservation fund. So if you emigrate, you can also withdraw your pension and you can take that immediately. So Then you've got your preservation fund, which would generally be that you had a pension which you transferred to another fund, and you preserve it for future, right? So a preservation fund has the rules that you can withdraw from it once in your lifetime, before retirement, and you can take a lump sum from that. If you have taken your lump sum from your preservation fund and you still have funds available in that, then it has the same rules as a retirement annuity. A retirement annuity is generally something you take out yourself with your financial advisor, or maybe with your employer, but generally you don't. It's something you take out yourself. So a retirement annuity has the rules that you can only withdraw this at the age of 55, or when you have emigrated from South Africa and you've been a non-resident for 3 consecutive years, then you can withdraw your retirement annuity fund. So the preservation fund that I just spoke of, if you've done your once in a lifetime withdrawal from it and you still have funds from it and you've emigrated, then you also have to apply to the retirement annuity rules, which is you have to be a non-resident for 3 consecutive years. And then you have a provident fund, which has the same rules now after its own rule changes a few years ago. It also has the same rules as a retirement annuity fund. So basically everything apart from your pension fund. So let's say you leave South Africa today, and you want to have some funds to take with you. You can take your pension fund and you can cash out a preservation fund if you haven't before, but anything else you have to wait 3 years. If you've already been there for 10 years, 5 years, and we seize your residency today, you are eligible to withdraw your retirement annuity immediately because you've met that 3-year rule, right? So just the summary is that a pension is immediately, preservation is once in your lifetime, or on RA rules, retirement annuity rules is 3 years, and so is provident fund. So to bring in the two-part system there is that everything that you had in your, let's call it your retirement annuity, sorry, no, let's call it pension. Everything that your let's say your pension was worth R1 million, as at 31 August 2024, that goes into your vested part, which means it has the rules that I just explained around pension. You can withdraw that immediately when you resign from your employer. All your contributions and savings as of September 2024 now has the same rules as a retirement annuity. A retirement annuity, if you didn't emigrate, has the rules that at the age of 55, you can withdraw 1/3 as a lump sum, and the remaining 2/3 need to go into a living annuity, and that gives you a pension to live for the rest of your life, right? But when you emigrate, the benefit that you have is that you can withdraw a full, you are not subject to the 1/3, 2/3. You can take all of your funds out of South Africa to the US and you can invest it there, in whatever you want to. So that's the difference between maturity, withdrawing your pension products on maturity, or withdrawing it on immigration.
Okay. Okay, so I think you've answered some of sort of the thoughts in my mind regarding it is possible uh to move your money. Sometimes there are waiting periods that apply. How does SARS tax these withdrawals? So from a tax perspective, do you pay more tax when you take your money? Are you liable for a tax payment that you may not have had to pay if you had waited or taken it out in South Africa?
Yes, so there is a higher tax rate, and it's almost like being penalized for taking your retirement out of the country earlier. So if you take your retirement annuity or your pension or whatever out at the age of 55 at maturity, you get the first 550,000 Rand tax-free, and the balance is taxed between 18 to 36%. So this is only the 1/3. So it does give you quite a substantial tax saving. The amount that goes into your 2/3, then you deduct as a or you get as a living annuity or a pension every year, and that's taxed at your normal rate. So you can, in your living annuity part, you can make withdrawals between 2.5 to 17.5% per year. So depending on how much you withdraw from your living annuity, it's going to depend on how much tax you pay annually. But if you think about it, if you are at the age of 55 or maturity, retirement, you're not earning a salary anymore. So your tax rate automatically falls a lot. So for that reason, it has much better tax benefits than withdrawing on immigration. But the reason why people would consider withdrawing on immigration, even though you pay a higher tax, and the difference that you pay is that if you withdraw on immigration, only the first 27,500 is exempt from tax, where just now I explained on maturity, the first 550,000 Rand is tax-free. So that's quite a big difference.
Mm.
And then the balance the tax between 18 to 36%. So you can essentially say that about 36% of your retirement savings is going to go to tax. So the determining factor here is, I would say, someone's age. So if you're close to maturity age, I would definitely say rather wait until you're 55 and withdraw on maturity. You get that tax benefit and you get your living annuity. And I want to touch on that now, but compared to if you are maybe still in your 30s or maybe even in your younger 40s, you might want to consider withdrawing your retirement annuity now, paying the higher tax and sending the money abroad. Because if you invest that quite cleverly, you can recoup the tax that you paid in a really good investment. And what you are facing is that if you leave that retirement money in South Africa to save the tax, is that in 10, 20 years from now, our Rand would have depreciated a lot more. So you are losing a lot more on the Rand dollar that you need to send out of South Africa at that stage. So for that reason, the decision to when to withdraw and what tax rates to pay is really to do with your age, I would say.
Okay.
Yeah. And then I do want to touch on the living annuity as well, is that that's the only policy or retirement product that you have that you cannot withdraw when you retire, when you emigrate. So on immigration, you can withdraw pension, preservation, provident fund, retirement annuities. Living annuities can never be withdrawn on immigration. So if you have already cashed it out in your 1/3, 2/3, and you have a living annuity, it remains in that status. And even if you live in the US, you have to withdraw your 2.5 to 17.5% per annum. It cannot be withdrawn until there's only a value of 125,000 Rand left. Then you can take that full lump sum. So what I usually advise people is then if you want to maximize and take your money out of South Africa as soon as possible, take the 17.5%. And then there is some taxing benefits between South Africa and the US where it is taxable in South Africa and it is taxable in the US, but you can at some times, depending on some factors, you can get an exemption in South Africa, but it depends on how long you've had the living annuity before you left the country. It gets very complex, but there is an option that you could have it exempt in South Africa.
Okay. Okay. I just wanted to say to our audience, if anybody wants to post some questions in the Q&A section while Mariska and I are chatting, please feel free to add those questions there. And if we haven't covered them in our discussion, then as we get to the end of our discussion, we can cover those questions for you. So put your questions in the Q&A. Okay, so we've sort of covered the different types, the weighting, the tax implications. What are the reporting and tax implications on the US side for individuals bringing in their pensions? Are you able to tell us a little bit about that?
So I won't touch too much on the US taxes because that's super complicated. And I think anyone going to the US and becoming a US tax resident, you're such strong people because I think that's very complicated. But what I can say is that It is taxable in the US as well. So you will have to report your income there. And then if it is, because the double tax agreement between South Africa and the US provides for the relief of double taxation. So you're not going to pay double tax, but if it is that you are not eligible for the exemption, then you'll pay tax in South Africa, it will be withheld. You will declare that in your US tax return, and then the tax that you paid in South Africa will be a credit in the US. So you're not going to pay double tax on your pensions of South Africa in the US.
Okay, okay, that makes sense. Um, and just sort of going back to your point of making a decision as to weighing up whether the tax you're paying on withdrawing and moving it over here. And I know from our own personal experience, the decision was if we left or shelled my husband's pension there, what did it stand to make over the next sort of 10 years versus if he paid the tax he was liable for there to withdraw, bring it over here and then let it sort of work for him here, or he can invest it. And he had to weigh up whether what the benefits of those sort of the difference between what he would make in with the money in South Africa versus paying the tax and bringing it over here. So that is something that I think a sort of good wealth advisor or investment specialist can sort of advise you on in terms of what your pension is making there, whether it's worthwhile paying the tax and bringing it over. Um, can you sort of just guide us here and point out some common mistakes that you've seen? You've dealt with a lot of people that have immigrated. Uh, I know your motto is about planning and doing things properly from a tax and financial perspective. So, what are some of the common mistakes that you've encountered and that you would sort of just give as advice for people that are either sort of navigating this right now or potentially already sitting here that may not have sort of ticked the right boxes already? Can you just sort of guide us on some of those mistakes and pitfalls to maybe avoid?
Yeah. So one that I hear a lot, and it's a misconception, is that a lot of people say, okay, I've lived South Africa, I'm in the US, I don't need to do anything. I've immigrated, I don't need to do anything. By doing that, you're really only temporarily abroad and you're still subject to tax in South Africa on your worldwide income and assets. So the reason why people think they don't have to do something is because, well, there's two things. Is that one, that I feel like financial immigration, which used to be the process in the past, brought up a lot of negative press and fear-mongering articles in the media. So for people thinking, oh, I need to financially immigrate, it's this big process, and I don't know if I can do it. And what I hear people emailing me about is saying that I can't financially immigrate because I still have my retirement annuity in South Africa and I don't plan to take it out yet, or I haven't been out for 3 years, so I can't financially immigrate, or I'm not sure, what my plans for the future is, so I can't financially immigrate. So really, it's just about the I would say the fear mongering is that financial immigration doesn't exist anymore. It used to be this process through the Reserve Bank where they placed your immigration on record from an exchange control perspective. And SARS was really in the picture only to give them a tax clearance certificate. That was it. And so many things fell through the crack with SARS, which is why now we are getting so many queries from SARS for people who have left and done the old financial immigration process. But the mistake that I feel people make is overcomplicating it and overthinking it. It's really an extremely simple process. We call it tax migration. And what it involves is seizing your residency with SARS. And if you have been out of the country for 3 years and you have a retirement annuity, it involves withdrawing that and paying your tax through that process. And then after that, we look at, do you have any remaining income or assets in South Africa, and can we deregister your number, your tax number? So it's really an extremely simple process. And I know that to me, I may be oversimplified because we've done it so much and we work with this on a daily basis, but it is a simple process. It's a lengthy process. It can sometimes take 4 to 5 months to get the whole seizing of your residency and getting your RA out of the country and getting deregistered can sometimes take up to 2 years. But it is a simple process, and the mistake that people make is thinking, I'm not going to do it because I'm scared of it. I think you're more at risk not doing it than doing it. And SARS has recently actually made a statement that people, so what we hear a lot is also people saying that I'm coming back, I'm going to be here for 5 years or 10 years, and I do plan to come back. So I'm not going to do anything about it. I'm just going to leave it. There's another mistake that I'll explain just now, but I'm just going to leave it. And what SARS has done is they've picked up on this. And what they have said now is that they are going to penalize those people when they come back to South Africa. So you've left, you've either just submitted zero returns in South Africa, or you've never done anything and you've gone under the radar. The plan with SARS is when you come back to South Africa, they will penalize you for all the returns that you did not submit, for all the foreign earnings that you did not declare because you never ceased your residency. And it's not a fact of then going back and saying, oh no, but I actually, I wasn't a tax resident. No, you didn't place that on record with SARS. So by all formalities, you were a tax resident and you do owe SARS that tax. And that is a movement that SARS is making now, which I think is going to cause a lot of problems for people who just won't cease their residency. So that's the one mistake.
Yeah.
And then the second one is that a lot of people also say, I earn below 1.25 million Rand, I don't need to cease residency. These two things are not linked with each other at all. So where the 1.25 million Rand comes in is that we have a foreign employment income exemption, which means that if you as a South African earn foreign income, your first 1.25 million Rand that you earn abroad will be exempt in South Africa if you meet the requirements of being out of the country for 183 days of the year, of which 60 is consecutive, and you're in an employment contract. So you're not a subcontractor or a freelancer. If you meet those requirements, the first 1.25 million Rand income is exempt in South Africa. So people say, okay, well, I earn below 1.25 million Rand. I don't need to seize my residency. I'm anyway not paying tax in South Africa. And where this goes wrong is that the Income Tax Act says that this exemption is only available to South African tax residents. So if we go back to where I started and said that we look at your ordinarily residence test. Do you have an intention of coming back? Yes, you do, because we've just discussed that. Secondly, what does the US DTA, double tax agreement and tax treaty say? You've got a green card. You've only got a permanent home in the US. You don't have a property in South Africa, or you do, but you meet one of the other requirements. Then you are a tax resident of the US, and you can only ever be an exclusive tax resident of one country at a time, right? So once you meet those tests, you are obligated to inform SARS. It's actually in the Tax Administration Act that you have 21 working days to then inform SARS. So the reason why the 1.25 million Rand is really not available to people who have met the requirements is because it's only available to tax residents. So the two are not really linked. And then to take that further even is that if you're a non-tax resident of South Africa because you meet the test or you have no intention of coming back, then all of a sudden none of your foreign earnings are taxable in South Africa, which means that you don't even have to worry about the 1.25 million Rand because it's anyway not taxable here.
Okay. So in essence, if you leave for a period of 5 years, you are according to the presence test a tax resident in the US. You cease tax residency in South Africa. If you did go back, is it as simple as just applying and changing your status again?
Yeah, so in the past, well, currently it is still, we call it a reinstatement of your tax number. So if you've seized it, you come back, it's literally an appointment with SARS. We say this person is back, they want to reactivate their tax number, and that takes up to 21 working days. So that wasn't a problem. But the added steps to that is now going to be the questions: did you seize your residency? Where were you? How long were you there? What did you earn? What assets did you have? So it is going to become a more complex process in the future, where SARS is going to go, okay, well, you didn't follow the process, so for that reason, there's going to be some penalties happening.
Okay. So, in my or particular case, I have ceased tax residency, but I'm still employed in South Africa. I still earn an income there. So someone asked me the other day, do I still have my allowance to extract funds from South Africa without having ceased tax residency? What is the process now that I'm no longer a tax resident?
Yeah, so anyone who's a South African tax resident has their 1 million rand single discretionary allowance that you can send abroad every year without having exchange control or SARS approval. But when you seize residency, you lose that 1 million rand single discretionary allowance, and you have to apply for an AIT PIN, which is an approved international transfer PIN that you need to apply for. It's from the first like 100 rand that you want to send abroad. And this it's not an additional one just for immigrants. It's actually like if I use my 1 million rand single discretionary allowance in a year and I want to send more than 1 million rand, then I also need to apply for this AIT PIN. And it's an application with SARS where you say, I want to send out 5 million rand, and then they just want to know what is the source of your funds. So I sold my property, I cashed out my retirement annuity, I got my pension from work, right? So you can just prove to them where these funds come from. And there's a whole lot of documents that go with that, because they don't just believe you when you say that. You have to prove the supporting documents, and then they'll give you the PIN, and it takes 21 working days to be approved. And then exchange control will allow those funds to flow out of the country.
Okay. Um, I I think I just need to, or I just want to put it out there to the audience. If there's any sort of questions that you want to pose at a later stage, or if you want to set up a consult with Ms. Mariska, please just reach out to me. I will share the recording with anyone who registered, and if you sort of want to take it further. I think let's jump across to some of the Q&A that's here. We may have already answered it, but let's see if we can help with some questions. So if you still have an RA in South Africa that you need to wait the 3-year period, do you still need to be a South African SARS registered during that period, that 3-year period?
Yeah, that's actually a very good question. And it gets complicated. But okay, so if you have left the country and you haven't been out for 3 years yet, but you meet the, you have no intention of coming back, so you break ordinarily residence, then you need to seize your residency immediately. You don't wait for the 3 years before you do that step. So you do step number one, you seize your residency. And then SARS will know that you're a non-resident. So in the period of waiting for your retirement annuity to pay out, you cannot deregister your tax number. It needs to stay active and it needs to stay compliant. So during that 3 years, you need to still declare tax returns to SARS. And once you're a non-resident of South Africa, only your South African source-based income will be taxable here. So maybe you still have a bank account where you're earning some interest that needs to be declared to SARS, although as a non-resident, you get an exemption on that interest. So, we've got a really good interest rate in South Africa. So non-residents have the benefit of putting some money in the bank in South Africa and earning interest, but it's not taxable here, which is really great for them. Or maybe you still have property in South Africa and you're renting that out. That income needs to be declared to SARS. Or maybe you're earning dividends from a South African perspective. That's still taxable here in South Africa. So during the 3-year period where you wait for your retirement annuity to be cashed out, you need to still submit tax returns, even if it's a zero return. So if you didn't earn any income in South Africa, in the past, we would just not submit that for our clients because they didn't earn anything. SARS would then issue admin penalties because the return was not declared. Obviously, we can dispute that because they didn't have any income. They didn't need to submit a return, but it costs more expensive because you still need to submit the tax return, a zero return, and then we need to dispute that admin penalty. And most of the times, our fees are more expensive than the admin penalty, which is like 250 Rand a month, that it's overdue. So that's why we advise our clients now just to submit zero returns for that 3 years, even if you didn't earn anything, just to stay compliant. Because when you withdraw your retirement annuity, you need to apply for that AIT PIN, and the AIT PIN will only be approved if your profile is compliant. You need the AIT PIN because you're going to be sending these funds abroad, so exchange control wants that. Then you can apply for the retirement annuity withdrawal, and then they look at your SARS profile again, which also needs to be compliant. So it's just very important to keep your tax number active and compliant while you wait for your retirement annuity to cash out. If after you've cashed out your retirement annuity and you have no more income or no more assets left in South Africa and you've ceased your residency, then we can deregister your tax number, and that way you are final with SARS. It's done. It's a lengthy process as well. SARS says they take 90 working days, but in actual fact, it's many, many more. So it gets done, but it just takes some time to finally get it over the line.
Is there if you don't deregister that tax number, are there any implications of that? If you've ceased tax residency, you're not earning anything, you don't have any interest, you don't have anything happening in South Africa, are there complexities of not deregistering your tax number?
Yeah, so just that SARS could expect you to submit tax returns
Okay.
unnecessarily, right? So you just have to continue with that.
Okay. Okay, got it. And then I think you may have touched on this, if I'm right, you said it kind of can range between 3 months and 2 years. But the question is, how long does the process of ceasing tax residency typically take? I would imagine that differs from person to person.
It does differ based on a lot of factors. So once we submit, okay, so there's a few steps in the process. So the first one is to cease your residency with SARS. That application with SARS takes 21 working days. So that's basically a month. So up until that point, we liaise a lot via email, and there's a lot of documents that we need to get. So that process can take about a month to get all the documents, get everything in order. Then we submit the application to SARS. That takes another month. So you'll be seized, your residency will be officially seized after a month. SARS issues you with a notice of non-resident letter, and that's your proof that you have ceased residency. So if you then have already been out of the country for 3 years and you do want to withdraw your retirement annuity, the second step in this tax migration process is the AIT application, which I've just explained. That takes another month to be approved. Then after that, we facilitate the entire process to withdraw the RAs, the retirement annuity or pension, whatever policies you have. And the reason that we help our clients with that is just because dealing with the fund houses in South Africa is almost worse than dealing with SARS in South Africa. And it's quite a long, tedious process. And we have a team who phone the fund houses like every second day to follow up on this. And we find if you don't, you're going to wait months. And we've also had clients who said, no, they're going to do it themselves. And they always come back because it's so difficult dealing with the fund houses. So that process typically takes about 6 to 8 weeks. And that is applying at the fund house to withdraw the policy, they disinvest the policy, and then they apply at SARS for a tax directive, which we facilitate that process. We keep on following up with SARS, submitting supporting documents, all of that. That takes 6 to 8 weeks. So you're looking at about 3 to 5 months to get that withdrawn. It also depends on what time of the year you start this process, because SARS goes on skeleton staff between the 15th of December to the 15th of January. So during December and January for 2 months, it's almost like a dead house. So if you start your process during that, we always tell people just expect it to take 2 months longer. And also when SARS comes back in January, generally there's a backlog of work. So it depends on what time of the year. There's certain times that we will submit an application and it's approved within 5 days, and then other times it's a month or maybe even a little bit longer. So it depends on that. So within a month, you'll have your formal notice that you've ceased residency. Within 4 to 5 months, you should have your retirement annuity in your bank. There is another step in that process is that the fund house will only pay your retirement annuity out to a South African non-resident bank account, and we facilitate that process as well. So we work with forex intermediaries to open a non-resident bank account, and then they will send the funds. So that would be like between like 4 to 5 weeks, you'll have your funds in the foreign country. Then after that, your tax return needs to be submitted in the next year when tax season opens. And then once that tax return has been assessed by SARS, then we can deregister the tax number. And that entire process can take your tax migration process up to 2 years sometimes, depending on when the tax season falls, how long they take to assess your tax return, because when you cease residency, there's a manual intervention. They look at was everything dealt with properly, and that sometimes takes longer to assess. So the full process to get deregistered can take up to 18 months to 2 years.
Okay. I think we have covered the question. This one, how does one go about managing the 1 million offshore allowance, considering the implications of RA's provident funds as well as moving shares and cash? How difficult is it to get a PIN above the 1 million cap?
It's quite an easy process as well. As long as all the documents are in order, then it's an easy process. It takes the month, like I say, and generally we will request the correct documents. We know what's requested from SARS, and then we'll only submit the application once we know everything is correct. So it's not a difficult process. You just need to be able to prove you've got the funds. So let's say that you have shares that you cashed out. You need to provide just prove to SARS your the statement of the policies that you cashed out, or if you sold the property. SARS also wants to see your bank account, that funds are physically in your bank account. So it's a current bank statement showing the funds that you want to send out with all the sources of those funds. So it's not a long process at all. How to manage the 1 million rand. This is really something that you can do either before you've placed your residency on record with SARS or before you've left the country. So if you know that you are leaving next year, then I would suggest that you start sending funds out now using your 1 million rand. And if you're a family, you can send 2 million rand, right? So you can start cashing out some funds now, and then in so your 1 million rand single discretionary runs from the 1st of January until the 31st of December. It resets on the calendar year. So you can send funds out now until the end of December, and then as soon as January strikes, you can send out another 2 million rand if you're a family. So if you haven't emigrated yet, you can start cashing out some of your funds to make use of your 1 million rand.
Okay, great. We have a question. This is around inheritance. Are you able to receive an inheritance from your South African parents if you are no longer an SA tax resident?
Yeah, so that's, I think, probably also one of the most reasons why people cease their residency is because exchange control has placed a block on it if you haven't. So current rules and legislation is that if you are living in a foreign country and you want to send your inheritance out of the country, exchange control will only allow it to leave South Africa if you have certain things in place. So there's different rules. If you were ever registered for tax in South Africa, then exchange control wants your notice of non-resident letter proving that you've ceased residency. or if you've never been registered for tax in South Africa because maybe you left as a child, then you don't have to register for tax. If the inheritance is below 10 million Rand, exchange control will allow that to leave the country. But if it's above 10 million Rand, then we just apply for a manual letter of compliance from SARS, and the exchange control will allow the funds to flow. You don't need to then register a tax number. So those are the two. And something that's quite important that I advise people who are doing estate planning is that if you are a South African and you have a South African will, but you have beneficiaries of your will that lives in foreign countries, then you have to advise them that they are going to have problems receiving their inheritance if they do not cease their residency. So it's also, that's one of the things, planning ahead of the time is very important. I actually had a client who I did tax advice for, where she had foreign beneficiaries, and they had all sorts of problems where we could not seize their residency. They didn't have, there was just a lot of problems. So what would have happened then is their inheritance would have been stuck in South Africa because they exchange control wouldn't let them take the funds out. So then ahead of time, we could change her will to give all her South African assets to one of her beneficiaries who was never a tax resident. So exchange control will let that flow, and she could, in her will, say all the foreign assets need to go to her foreign beneficiaries because they would have not been able to take funds out of the country. So also very important, if somebody has a South African estate with foreign or non-resident beneficiaries, very important that they seize their residency as well.
Okay. That's some really good advice. There's a question around that withdrawing. Won't SARS query details or balances of your foreign bank account if you start withdrawing your discretionary 1 million before you immigrate? Also, how do you open a foreign bank account from South Africa and not living in the US? Um, I
Okay.
Yeah, I think you have. I think you've sort of covered. I mean, your discretionary allowance is something that you're allowed. I don't think it's questioned as long as there's a source of funds, right?
Correct. So you don't, if it's below the million Rand, you don't need to prove anything to anyone. You can literally send the funds from your apps or your FNB. So
Yeah.
you don't need any for that. What they do ask though, when you do apply for the AIT PIN, is they want to know what are your South African assets and what are your foreign assets, but they don't ask for proof of it. That you basically provide them with a statement of assets and liabilities for the past 3 years, and this includes your foreign and your local assets. And again, people are very scared to provide this information to SARS. It's not a problem unless you've evaded tax, obviously. But they've never, in my experience, asked me for my clients proof of whatever is on their statement of assets and liabilities. It's just information that they want.
Okay. Um, the question asks, how do you open a foreign bank account from South Africa and not living in the US? So, I mean, I can speak to that. It's very difficult to open a US bank account sitting in South Africa. Generally, you need to be present to open a bank account here. I know that you guys, when it comes to those individuals sitting already abroad that need their pensions to be paid out by the different sort of places that hold the pensions in Providence, you set up the bank account on their behalf. Am I correct, to facilitate that process?
Yeah, we work with a Forex intermediary and everything is electronic. So they don't need to be in South Africa. The whole process is managed electronically, and it's a CCM account or a non-resident account. So generally you won't have internet access to these kind of bank accounts, but it's generally just used to facilitate your transfer of funds from South Africa to the US or wherever you are in the world. But it's quite an easy process. I mean, I say easy. There's a lot of FICA and stuff that you need to go through. It's paperwork, but it's you can do it. You don't need to come back to South Africa to do it.
Okay. I think we've covered most. I think, okay, there's one question here that we haven't covered, and that is maybe you can just give us an idea as to the documents required for ceasing tax residency. Is there sort of give us an idea as to what's sort of required by SARS?
Okay, so it's your general FICA documents, ID, passport, proof of address, bank statement, and then they want your passport stamp from when you left South Africa to prove that you've exited, and then your visa allowing you to go into that country. So, you know, what allowed you to go there. If you had a US passport, that would be how you were allowed to go into that country. And then they want a travel diary. So if you went to the US, came back, because lots of people left 5 years ago, they come to visit their family. So they just want a travel diary to see when you left, when you came back, and then your corresponding passport stamps. So this is really just to see that you came and left, you know, that you never uh, you're saying that I am immigrating 5 years ago, but really you are you spent a lot of time in South Africa. So they just want to see that. And then a very important document that they need if you want to withdraw your retirement annuity is a tax residency certificate from the US. And this is something that sometimes takes quite a while to obtain, because I think how I understand it is that you first need to submit your US tax return for that
Yes.
year, or they will give you a tax residency certificate. And sometimes it's not tax season yet, so that can delay you getting a tax residency certificate from the US. But that's only when you get to the retirement annuity portion of it. You can seize your residency without this.
Yes.
Generally, what we support SARS is sometimes it's very inconsistent with SARS as well. Sometimes they'll approve the residency change without anything, any proof that you're a tax resident there. Sometimes they want the tax residency certificate, but we get away with giving your tax registration, so proof that you've done that, that you've got that registration. Yeah.
And then there's I think there's also a few sort of proofs that you live and exist. I know we sort of had to provide a gym contract or something that shows that we actually um, living in the US, a mortgage statement or a rental or a lease agreement. There's a few other sort of supporting documents that I remember we had to provide.
Yeah, so it depends on what your situation is as well. Like if you still have some ties in South Africa, then it comes back to that tiebreaker clause. So the first one that I explained was, where do you have a permanent home? The next one is, where's your economical substance stronger, right?
Yes.
So and that's why they would then want to look at, where's your gym contract? Did your wife and kids immigrate with you? Are you going to school on that side? Do you have employment? Do you have a home? Like, you know, they do dig into those things. But that's if you still have, you know, if it's not an easy case, you know,
Okay.
there's some situations. Yes.
Okay, that makes sense because I'm still earning in South Africa, but I'm proving to them that I actually live here. So I think that's where there was a little bit more sort of burden on providing proof for that. So
Yeah.
sorry, carry on.
I want to actually just touch on that topic. You know, if you do immigrate and you live in the US, but you do still earn from a South African employer, I also just want to explain to everyone like what that looks like for you. So, South African source-based income. So let's say that you live in the US, you've seized your residency, so now you are only subject to tax in South Africa on your South African source-based income. Even though your South Africa your salary is from a South African employer and you get it from them, that's not South African sourced. It's sourced where your feet are. So if you are physically in the US while earning that salary from South Africa, it's not a South African sourced salary or income, and it's not taxable in South Africa. So you can get an exemption for that. There's a tax directive that you can apply for, that your employer in South Africa doesn't have to deduct pay as you earn. And there's a specific code that they can use on your IRP5. And then you also don't pay tax on that South African salary in South Africa. Of course, you're going to pay tax on that in the US, but you won't have that withholding pay as you earn in South Africa.
Okay, that's interesting. That's interesting. I think we've answered all the questions and we're almost on the hour. Thank you for spending the time chatting with us. I know that sometimes this can get complex and it's sort of a topic that's quite scary to people because it's the money that they've sort of saved up for many years. So thank you, Mariska, for taking the time to sort of chat us through this. If, as I mentioned previously, I will share the recording and the contact details for anyone who wants to get in touch and sort of chat with Mint a little bit more regarding their unique needs, and you can take it from there. So I really appreciate you and your time today, and thank you to those people who joined us today as well.
You're welcome. Thank you so much.
Cheers. Thank you. Bye.